Most people think trading is about finding better entries, but the reason most traders lose money is a lot simpler than that. They're trading when the market isn't meant to be traded aggressively. They see a setup, they click some buttons, and they completely ignore what is happening in the world, what data is coming out, and how big money is actually positioned. So this video, I'm going to break down how I decide when to trade using headlines and economic data, and more importantly, how that decision directly affects my swing trading and my options selling. Because I don't trade the same way in every environment, and neither should you. So when people hear macro, they think it's this overcomplicated thing, and it's really not. Macro is just answering one question for me. Is money comfortable taking risk right now or not? I look at macro through two lenses. The first one being headlines. What is happening in the world? Recently Trump just bombed Venezuela, the whole oil situation going on right there. That is a huge headline that's in the news. The second thing that I look through is data, jobs, inflation, rates. Macro doesn't tell me where I'm going to enter. It just tells me how aggressive and patient I should be with my trading. So what I do is I use this to stack a bias in a very simple way. Step one, I'm just charting the baseline. First of all, I'm looking at my chart and I'm asking, are we generally going up or are we generally going down? Right now, as you guys can see, we did have this big fall off right here, but overall, we are pretty bullish on gold coming off these lows, putting in a new high, coming back, and I do think we're going to be making a higher high. Now, unfortunately, this was a trade that I called out in my last video, and I think even the video before that of what I was thinking of doing. So if you guys are not watching the other videos, you are missing out on free game, free sauce. I literally called out this trade to a T exactly how it is here, and if you executed this, this would have been the freest trade you would have had. I am so bummed that I did not get executed on this trade. I put it here just to show you guys, and personally for me, I was thinking that we would get a break and retest of this area, some more structure that I could look for another swing low to put my stop loss against and continue the highs, but unfortunately we didn't get that. And for me, I'm not upset to miss a trade like this when I don't have an area to place my stop loss. We did have this massive gap up right here during Asia session that really did kind of mess with my stop loss placement. As you can see, there's really no place to put the SL safely besides like maybe this low or under this session, but this has a good chance of getting liquidated at a future point. And obviously there's like a huge gap fill right here. So again, I'm not upset about this. If there was no safe place to execute the SL, I'm not executing the trade at all. Generally, we are going up here. And, when I look at a chart baseline, it's just telling me the path of least resistance. It tells me that I can be looking for gold longs. The next thing I ask myself is, are headlines creating confidence or are they creating fear? Are they pushing money back into stocks? Are they pushing out of them into risk on assets or risk off assets like safe havens such as gold? When I think about those two together, it does give me a good overall consensus of which way the overall market is looking from. I usually like to think from a retail trader's perspective because this is data that everyone can see. These are headlines that are circulating and everyone can see. Because the third thing is going to be actual data. And then I actually check, jobs, inflation, Fed events, and I just use Forex Factory to do this. I did talk about my last video how TradingView now has this analytics tab right here where you can see news, you can see the instrument, the headline, the data, what everything came in at. So I don't really use this. You guys know I use Forex Factory just because it's a very, very easy site to access the data. It just shows it very clearly as expected, actual and projected. So it's a very clear indication of if we missed that, if we beat that, if we kind of stayed the same. Because all I'm asking myself is, does this data help buyers or does it help sellers? And from a perspective of the data, if we had a miss, that is very, very strong for sellers. If we had an expectation that's beat, maybe that's going to help buyers. It just helps me frame the trade from a data perspective that maybe most traders are not looking from. Now, the key part and something that a lot of people get confused on is I don't need all three of those to agree, but the more that they line up, the more confident that I actually get. So let's talk about bullish conditions, and being bullish doesn't mean that price goes straight up. It means that buyers have an advantage. All bullish macro looks like is, headlines are calm, positive, data isn't breaking expectations, and dips are being bought, like in this case right here. In a case like gold, where we usually associate gold longs with kind of fear, uncertainty, geopolitical tensions, the whole Venezuela situation right now, massive, gold longs are favored in a situation like this. That's from a macro standpoint. From a data standpoint, that would be jobs coming in very, very low in the US. That would be, rocket fuel for gold. All that we're looking for are dips being bought on the chart like this after a sharp sell-off. We look for some support. We look to continue that support and, continue making higher highs and higher lows on the charts. When the macro is bullish in a swing trading perspective, swing trading does become a lot easier because this is when I'm comfortable holding trades for a lot longer, letting my winners kind of breathe a bit and not entering on these any pullbacks or anything. And I'm not chasing anything here. I'm just entering off my simple break and retest model. Like you guys have known from my first videos, I only trade break and retest. All that is an area of interest right here, like this, where we're respecting the low that we've put in, breaking above and retesting the 50% of that area. For me, most of the edge that I have in trading is the macro bias. So the charting perspective is a very, very low portion of actually, what trading is to me. And a very simple entry model like this is what actually gives me that easy edge to follow the market, not predict it. I'm not trying to be a hero here and force any trades. I'm very happy with the trades that I've taken, that I've shown you guys all in past videos, and I think you guys can say that the results kind of speak for themselves here. This is a bummer. I did just put the buy tool on the chart to show you guys how perfect of an execution this one was, but all I'm really doing is aligning the direction with the way the market already wants to go. But how does this affect something like my option selling? In bullish conditions, I do sell cash secured puts still below current price or on stocks that I want to own. But why? Because I don't need the stock to explode any higher, and I just need it to not collapse. If price is staying above my levels, I'm just keeping premiums like in this case, but if it drops, I'm buying the stock at a discount and then I'm selling covered calls. Bullish macro is just getting paid to wait. So in this case, I'm just keeping premiums and then I have a covered call position up here and I own some more shares up here. So either I'm keeping some premiums or I'm averaging into this stock that I really, really like and want to hold through the course of 2026. So now let's flip it. What does a bearish backdrop mean? Bearish doesn't mean sell everything, panic, and just unload everything you own. Bearish macro looks like scary or uncertain headlines, and data is starting to disappoint. This would be violent reactions to news or data numbers coming in very, very heavy that is, going against what the economy wants. In a case like gold, this is where we would go long, but in a case like indices, this is where everyone would want to go short. But how does this affect my swing trading? In bearish conditions, I'm a lot more selective with my swings, which means fewer trades, smaller size, and I have a lot quicker of profit taking. Now, in a case like this was an area of interest I was very, very interested in. As you can see, we tested this many times before breaking it, and we did not get a retest, unfortunately. In a case like this, as you can see, this would have been a very, very quick trade and move to where my TP was set. I was targeting some Asia lows and some unmitigated lows from the left right here. Very simple trade idea and a very quick execution versus something like gold longs where I let these ride out and let them play out a lot more loosely. The easiest thing for me is I'm not forcing anything just because price is looking cheap or it's in a good spot. If I don't see any confirmation, I'd rather not be in a swing trade at all. But on the other hand, how does this affect options? Because in bearish conditions, I still do sell options. Instead, I'm selling puts at a much farther away price. I'm reducing size and I'm shortening the duration of the expiry. Or sometimes I just don't sell them at all. If headlines are going to be unpredictable, capital preservation always comes first. Bearish macro really just means protect the account and don't chase the premium. Instead of having a cash secured put maybe at this area right here, I'm probably selling a cash secured put way down if I don't want to be assigned on the stock, while accepting that I could own 100 shares at this level as well. Now, the most important part that most traders don't understand, and it separates the best traders from the ones that are just learning, is that when I do nothing, that can be a trade in itself. There are weeks that headlines are going to be messy, data is heavy, and the chart is just really choppy. In those weeks, my swing trading slows down completely. And on the options side, either I'm sizing down or I skip the week in its entirety. If your bias stack is 50-50, that's not an edge at all. That is literally a coin flip. I don't trade coin flips. If I want to do a coin flip, I'm going to the roulette table. So my actual decision checklist for all of this is 1, what direction is price favoring? In this case, we are favoring longs. 2, are headlines supportive or scary? In this case right here, the whole Venezuela situation is nuclear for gold longs, as you can see what we had right here. And 3, does upcoming data help buyers or sellers? In this case right here, again, I did predict that JOLTS job openings that came out today, January 7th, would be a little bit disappointing, which it was, and that also helps gold longs. If at least 2 or 3 of these agree with each other, I will consider the trades and I will sell options confidently. If not, I just trade a lot smaller or I don't trade at all, and it's very, very simple. The key takeaway here is that macro just tells you how aggressive to be. Swing trading works best when your macro is aligned with everything else, and options also shine when uncertainty does exist. The whole thing here is that patience is a position in itself. I don't trade just because I'm bored. I trade because the environment supports it. And once you guys understand this, your trading will change forever. If you can master one thing in your trading, make it this. Learn how to change how you trade based on the environment you're trading in. Most traders use one style, and no matter what, the traders who last are the ones that adapt. If you guys found value in this video, make sure to leave a like, subscribe, and leave any comments that you have below. This was a quicker one just talking about how macro can frame different events and different market structure regimes and how you should approach it. And with that, we'll see you guys in the next one.